Hi everyone, we are on day 12 of 90 Days to Taxes. This is a series where I'm taking new business owners, businesses that may be disorganized, and I am helping you get organized and ready for tax season. Today we're going to talk about charitable contributions. I see a lot of mistakes from business owners with charitable contributions, and it costs them additional money in taxes. So let's talk about what actually constitutes a charitable contribution versus a business expense like advertising. So just because you are paying a nonprofit for specific expenses like advertising, that doesn't mean that's a charitable contribution. A charitable contribution is a payment to that nonprofit where you're not getting anything in return. Okay? If you're paying that charitable contribution to advertise, for example, maybe you're sponsoring an event and your business name is going to be on some sort of banner, that's an advertising expense. Okay, we don't classify that as a charitable contribution. That's an advertising expense. Now, if you say make a payment and part of that is for advertising and then part of it is a contribution to the charity, you would have to divide that payment up into advertising expense and then a charitable contribution. So you would have that classified as two separate ways, right? One as deductible advertising and then one as a charitable contribution. So then when it comes to charitable contributions made in your business, C corporations are the only type of business that can directly deduct that on their tax return and reduce their tax, okay? C corporations are the only type of business that can do that. C corporations can deduct right now up to 10% of their taxable income as a charitable contribution. Any sort of excess charitable contribution can be carried forward for so many years. Next year, starting next year, because of some tax changes, that 10% limit is still in place, but there's a floor, meaning that you have to get at least 1% of that taxable income in order to start looking at deducting that charitable contribution. Now, when it comes to other types of businesses, Schedule Cs or sole proprietorships, partnerships, and S corporations, those actually cannot directly reduce the taxable income from the business. What ends up happening is that charitable contribution flows to the owner's Schedule A, and then it's subject to limitations on that Schedule A. If you want more information about how this works, check out the video attached to this short, and I'll go into more detail on what it looks like to deduct those charitable contributions. I will see you guys tomorrow.